Welcome to the Traders Clinic, your regular shot in the arm of trader insights, philosophy and knowledge, brought to you by two professional money managers, Crooks and Charlie Burton.
In each episode, we answer your burning trading questions and also cover all things from the world of trading. So we're back.
We are back, back from Holly Bob's, aren't we?
Yes, mate.
In the interim, but
last time in Greece, and now back to work. So, interesting one to start this show with. We thought we'd have a little discussion about the recent FCA update regarding crypto promotions and firms promoting cryptos, because it's fairly big news, and I think it's important for the viewers to know a little bit more about, I think, what we think about what this means and where this could be going, really.
Yeah. I mean, I think at the moment the FCA have, I say clamping down, but clamping down on the promotions of cryptos. You've got Instagram influencers, pumping whatever ICO that's coming next of some new token or whatever. Yeah. And so they really have come down hard on that. Plus also they're coming down a bit stronger on some of the platforms as well, where you can actually buy and sell. So, for example, Bybit, I think, have been banned in the UK now for whatever reason. So
I think Binance have got to go and get another partner to work with. I think there's all sorts of things going on there.
Yeah. Well, the interesting thing with Binance is that they've, although from what I know, although they have got regulation by a third party here in the UK. Their, whatever they call it, their university, their education arm is not allowed to operate here in the UK. So they do have a training side to what they do. So they've really come down onto the industry. Makes you wonder what's coming next, though.
It's interesting, because the FCA are creating essentially a hit list. So you're going to be able to go to a list and see which companies they've investigated, which companies are on the hit list, and obviously companies now have to have that FCA regulation to be able to promote it. For me, I think it's potentially, I got asked last week, is it a good thing? And I think the answer for me is yes, because we've had plenty of discussions over the years, and more recently, how difficult and how challenging and how potentially dangerous it is if you are out there trying to just simply buy cryptos, like going onto the exchange, the risk of being hacked. You were talking about it earlier when we were having a coffee, and I think this regulation is a step in the right direction. Some people may argue differently, but I'm for it.
Yeah, and one thing to note as well, as far as brokers trade, because you can trade cryptos through a traditional CFD broker, which is like crypto on steroids. So you're trading with leverage on CFDs on cryptocurrencies. So why not get a bigger shot in the arm? But for the average retail trader now, you are not allowed in the UK to trade a CFD via like Bitcoin on a CFD, unless you have professional trader status. But I'd always sort of say, well, do you need to be trading Bitcoin? I mean, the nice thing is trading through a broker, if you're using correct money management with it, and that's fine, is at least your money's safe.
Exactly. Yeah.
Coming back to what we're just saying. So I was looking at just the other day at the process of buying a particular cryptocurrency and the hoops you have to jump through in order to try and protect your money, like have a brand new laptop you've never used and you're never going to use for anything else. If you want to get it into a cold wallet, you don't want to keep money on an exchange because it's at risk of your account's at risk of getting hacked. Even the transfer from the exchange to your account there's a potential. So you want to have a laptop which is not used for anything else. So none of your keystrokes are ever monitored or anything like that if someone was going to be. My word, there's a lot to do. It's very, very complex. Then you've got to save all your passwords, because if you're going to hold something for a year, you can't afford to go and lose your passwords. That's it, or you've lost your crypto forever. There's a lot to do. Yeah. And committed people are fine, but for a lot of people, why would you keep your money on an exchange? It is at risk of being hacked. And that brings us back to the benefits of trading through a normal broker on other markets, asset classes like Forex, like stock indices, stocks, whatever. And your money at least is safe as it can be with a broker sat at your money sat in Barclays Bank or whatever. And I know a lot of people will probably like, oh no, but but you know what I mean? It's
ring fenced and it's
not going to get hacked. And it's ring fenced like that. So
I think the challenge is a lot of people still, I mean, this there was all that hype with crypto, then it died off, and I'm seeing it a lot more murmurings happening around, and that's the risk, is that people get attracted to the hype, and then suddenly they're not, if they're trading it, even if they're trading it through a CFD broker, they're then not worrying about, you know, the spreads. Even at professional status, the spreads are still much bigger if you're wanting to trade, you know, Ethereum or whatever it is against the US dollar. So for me, I think it's just be wary of the hype, and actually, I think this is a good thing. Where it will go, who knows? It may be that they clamp down a little bit more, but I've always been in favour of some regulation on anything. I don't like the idea of something or trading something that feels like the Wild West.
Yeah, and I think they're going to make it harder for people to buy and sell. Because there's going to be fewer places, especially, and we're being very specific right here today, talking about the UK regulation. But as we know, when one major jurisdiction introduces a load of regulation, much like in the US, it filters through to elsewhere, Europe, you know, Australia especially, and the UK. So, so I think it's something that, by all means do it, but get your money into a cold wallet. Don't leave it on an exchange. And even if you're going to have it on a cold wallet, be careful of, you know, what device you're using to have it to use for that cold wallet, because even that could get hacked. And make sure that you have your password stored in 2 or 3 different locations in case you
memory stick, paper, old-fashioned way, all sorts.
Yeah. It's a big old process, a big commitment to doing that, or just, you know, trade other assets, and I'm sure you can do fine just doing that. But I think the allure with crypto is that potential to have a 20 bagger, 50 bagger, 100 bagger.
Exactly.
That's the appeal, especially for people who haven't got a lot of money. I get that allure.
It's their shot at wealth, isn't it? It's their, you know, it's like, and then you're moving into the gambler mindset. Now, fair enough, if you've got a plan and you're distributing a certain amount of money across multiple cryptos that are very, you know, currently very low in price, fine. But I think be wary of becoming like transfixed by the greed and all the hype that's going on and all the predictions of where things are supposedly going to be. We'll have to wait and see.
Yeah, I mean, even I'm relatively positive, especially towards the likes of Bitcoin.
Yes,
we've got, you know, there BlackRock and others have got applications that sitting at the SEC for spot Bitcoin ETFs. And I think if they do get approved, potentially at some point in 2024, then mum and pup can easily get access to cryptocurrencies, Bitcoin, without having to go through all the hoops that we're just talking about and how complicated it is. They can just, I'll put some of my pension money into that ETF there. I mean, widely accessible. So you do sort of think the potential, certainly for something like Bitcoin or whatever, is still quite high, but don't bank your life on it either.
Don't put the house on it.
Funny enough, it was 2017, as we all remember, we had this big wave going through 2016 and into December 2017, but just before Bitcoin crashed. And when did it crash? When futures trading came online.
Yeah.
So it was all this expectation of when this spot ETF goes live, it's going to go like this. And just this week, there was a rumor, wasn't there?
Yes, the rumor
struck this past week.
Yep.
From when we're recording this, and Bitcoin flew up during the day, and it was just a rumor of this ETF being approved. But so maybe something else will happen, because that's going to be the obvious move.
Yeah. Well, it's the difference.
Long term,
it's the difference between investing and trading.
Correct. Yeah.
Good. So, great question this week we've had in is I find this one fascinating. I'm nearly always on the wrong side of being profitable. Should trading be this hard? Well, I think that, I read that in 2 ways. I think there's potentially two things going on here. The first one is the statement about being on the wrong side of profitability. Clarification on that would be useful for the person asking the question. So what do you mean by that? Do you know if the strategy you're trading has the potential to be profitable? Are you trading with discretion and somehow just feeling like you're almost making money or making a little bit of money, then going into a loss, then not actually progressing? And then the second half of it, which I find really interesting, is should trading be this hard? So I'm going to attack that bit first, because to me, this is not the first time somebody's saying that. I find trading really hard. I find it really challenging. And it's like, well, what were you expecting when you started up? Now, again, with all those educators out there that make it sound like it's easy, 80% win-loss ratios, all of these things, you would be forgiven when starting out to think that this is just it's a turnkey operation, off you go and you're making money. But I think the key thing for this person is to look at the expectation he has. And if he looked at it and said, well, maybe if I went into this knowing that this was going to be challenging, there's going to be bumps in the road. I'm going to have losing weeks, maybe even losing months. I've got to go through a learning process. It's going to take me time to get my emotions in check. They'd probably actually find it easier. The irony is if you go in with this expectation, it's 2 months down the line, you're going to have it all sussed. You're probably going to find it hard. So that would be the first thing, the mindset side of it. But being on the wrong side of profitability, there's a lot of reasons why that could be.
Yeah, and I love this, like you said, the second part. Is trading supposed to be this difficult? Yes, it is really difficult, and it does get easier. But in the decades that we've been trading gets easier in some ways because you get used to it and you build experience. But trading is never easy. No. It is never easy. The market is always going to challenge you. The market, just when you think you're in a great trade, it will all roll over against you. Something will happen and the trade you're in will go the other way, or you'll get close to a target and then it will fall away and you didn't quite get hit, or you get stopped out only for it to then go higher. All of those things, they don't stop happening. Exactly. It's just that as you get more experience, you just brush them aside, and so you just accept it as part and parcel of trading, so it doesn't affect you in the same way. Whereas for this chap, it's still, quite rightly, it's still affecting him at the moment. So is it hard? Yeah, damn right it is. Trading is one of the most difficult things you will ever do in your life, if you decide to stick at it. But our advice is always stick at it, because the people that do get to the 5-year mark, 10-year mark, 15-year mark, they're there for a reason, but it's not easy.
And they're there not usually because suddenly their technical knowledge in year 3 goes through the roof, or they suddenly can start predicting the market infinitely better than they could when they started out. Is that they built that emotional muscle. It's like going to the gym. If you haven't been to the gym for 2 years and you go in and you do a weight session, it's going to really hurt the next day. 5 years down the line, you'll still ache after a session, but your body's better equipped to deal with it. And I think it's important you say it does that. I think the key thing there is it doesn't stop. You just become better at dealing with it, rather than trying to aim for this point down the road where everything's going to be all right and euphoric, and there's this utopia you're aiming for where you're never bothered by a trade or you're never challenged. You're setting yourself up for failure. You're setting yourself up to potentially fail, because it's a false expectation.
And I think when it comes to expectations, there's the bane of my life is people having an expectation that as they accumulate more knowledge and experience, that they will be right more often.
Yes. Oh, yeah.
So, well, surely, the more experience and the better I get as a trader, they associate being a better trader or more profitable trader with being right more frequently. And it's not the case. It's just, if anything, you're right less frequently. You're just really good at running the winners.
Yes.
And so, again, a lot of management of expectations there, of his own expectations. Actually, if he accepts that, these guys are saying that trading is really tough. Yes, it is. That's where maybe lower your expectation levels as to where they were to where they are now. And actually, if he's either side of break even, I would actually say congratulations.
Yes.
Because if he's only a year into his trading, I'd say that's fantastic. Well done. Keep going. Because you're only a small way away from turning that into profitability.
Love it. Great stuff. So, last question for today: how often do you update your trading plan? Now that gives a whole host of questions. I mean, you can answer that very quickly. I know we were talking earlier. I don't really. I think the last time I updated my plan personally in terms of how I approach the markets was when I started trading a fund, and that was really to look at risk mitigation, because trading other people's money, the fundamental thing is I want to minimize the drawdown. That was something that was big for me, and I know the same for you when you started trading other people's money. But I think the idea here is there's almost a bigger question at play here, is how often should you be updating your trading plan? Well, if you've got a system that you're running and you're happy with it, then you might have small tweaks, but you shouldn't really need to be updating or changing your trading plan on a regular basis.
No.
If you are, then that probably says that you're jumping around from strategy, or you're not clear on what it is you want to trade within the markets.
Yeah, my answer is going to be the same as yours. His question was to you on that basis. I'm exactly the same. My trading plan's been the same for the last decade. The only thing that changes is you tweak, as you just said, according to market conditions. There might be some finessing at times, depending on the market conditions that you're trading at. I mean, look at the market conditions in October here, middle October of 2023, with geopolitical events around the world and everything else that's going on fundamentally as well. So there are some tweaks that you make, but it doesn't. The patterns, the strategies, the approach stays the same, and it's just the tweaks might be on risk management side of things. For example, you might adjust your risk a little bit, but no, you shouldn't be jumping around, as you said, from trade to trade, or changing your plan. If you are, it's because you are still searching for different strategies, and really, once you become an accomplished trader, you shouldn't need to be searching for different stuff. You should be happy with where you're at, and you just carry on trading that.
So I think to almost flip it, the other side of it is one of the things you can do, especially in the early days, to stop yourself from jumping around is have a written down plan. And again, you may finesse that and change that over time. But the other side of it is a lot of traders will try something, then flip. And if they actually had something concrete to work on in the early days, obviously as you get more experience, you don't really need a plan, because what you trade is within you. But yeah,
brilliant stuff.
Good.
Okay.
That's done, I think.
It is indeed. His name's Ali Crooks.
His name's Charlie Burton.
Trade safely out there.